the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Singapore shares actually moved higher today as regional bourses traded mixed. So if we look at the Straits Times Index, it was up 0.27% at 3,928 points at about 2:31 p.m. Singapore time, with a value turnover of $668 million seen in the broader market. Now, let's take you through the closing numbers. The STI, let me toggle between the pages. The STI up 0.42% at the close at 3,934 points. In terms of value turnover, we are looking at 1.08 billion Sing dollars. Now, gainers outnumbered losers 266 versus 205. Top advances for today we've got for you SGX, Semco Industries and Keppel Co. And top decliners we have for you Holpa, New Incorporation USD and SIA. Well, in terms of companies to watch for today, we've got for you OCBC, because the bank's insurer Great Eastern is seeking to delist through OCBC's exit offer of 30 Singapore dollars and 15 cents per share. Now, elsewhere, from optimism arising from what's described as very positive talks between US President Donald Trump and Chinese leader Xi Jinping to the stunning public row between Trump and Tesla's chief Elon Musk, we've got more international and corporate headlines in focus. Now, joining me on the line on a Friday is Sunny Soh, lead technical analyst, capital markets and investor education at SIAS. Sunny, welcome back.
Hi, Tian Tian. Thanks for having me back on Market View.
What a day. And how long has it been since we last spoke on air?
I believe almost a year.
Wow, almost a year. Time flies. Okay, let's go back to the Singapore stock market. Let's start with the Singapore stock market as usual. How did the STI fare today? Any surprises when it comes down to the biggest movers and the sectors that they lie in?
What I see on the STI Index, we are about 16 points today, or 0.42%. This was despite the negative close that we saw on Wall Street last night. So Wall Street was actually weighed down by Tesla, which had a dramatic fallout with Donald Trump over social media, over his Trump administration tax bill. Even though markets were earlier upbeat about the very good phone call that Trump had with China presidency, that resulted in a very positive conclusion of a possible trip to China for Donald Trump. But then that spat with Elon Musk really put down the U.S. market. Yeah. But back to the Singapore market, on some of the biggest movers I see on our benchmark index today, I do see some industrial names performing quite well. Sembcorp Industry is up 20 cents, or about 3%, and Keppel was up by 18 cents, or 2.6%. And on Keppel, they had announced this news today that the company is divesting its stake in a New York-based company and a logistic park in China, and that will unlock more than $80 million of value from the monetization of their non-core assets. So this divestment were part of their strategy by their accelerating monetization task force that was set up by Keppel in earlier part of this year, where they intend to monetize 10 to 12 billion Sing dollars by the end of 2026 next year. So Keppel has divested a 20.5% stake in Computer-Generated Solutions. That's a company that provides business process outsourcing and enterprise resource planning software. And it's also divesting a 75.8% stake in the Wanjiang Logistic Park, which is an integrated agricultural logistic park in the Luan city of China, Anhui province. So this divestment is set to complete in second half of 2025. And the asset manager also mentioned that they are currently in advanced stages of talks for another 550 million worth of real estate transaction. And the monetization of these non-core assets will put the company in a good position to continue to reward shareholders well. And this divestment, they have mentioned, are not expected to have any material impact on Keppel. And Keppel shares are up 18 cents to $7.15 today.
I see. Well, Sunny, if you could zoom in on some of the companies to watch for today, I believe we have got OCBC, because OCBC's insurer, Great Eastern, it is seeking to delist through OCBC's exit offer of 30 Singapore dollars and 15 cents per share. Now, OCBC said the offer was made at the request of Great Eastern and is aimed at resolving Great Eastern's 11-month suspension in share trading while providing its shareholders an exit at what it describes as a fair and reasonable price. What do you make of the offer from your standpoint at SIAS?
Yes, I do remember us speaking about this topic in last year, somewhere in July.
Yes.
So I think this is a very positive development for GE shares, for GE shareholders, especially as they have waited 11 months since the suspension in July 2024. So this new exit offer of $13.15 per share is also more than 13% higher than the previous offer of $25.60. So this new offer is also now deemed fair and reasonable by the IFA to the deal, which is EY. So this is very good news for the minority shareholders that have been lobbying for their rights, and SIAS also championing their rights as well. But this new offer is also conditional because we need at least 75% of the total number of issued shares held by GE shareholders will need to vote in favor of a delisting resolution, which the insurers will table at an EGM. But OCBC will not be voting on this resolution. So if the delisting resolution is passed, right, Great Eastern will be delisted from SGX, and shareholders who accepted the exit offer at $30.15 will be paid, while those who do not accept the offer will remain as shareholders in the unlisted insurer. So if this delisting resolution is not passed, there is also another pathway. The exit offer, the $30.15 exit offer will lapse, and GE will then propose another resolution to satisfy the free float requirement by SGX.
Yep.
So this will include a one-for-one bonus issue resolution comprising of new ordinary shares, which will be listed and carry voting rights, and another newly created Class C shares with non-voting rights. So these two pathways, right, will actually provide shareholders the chance to vote whether they want GE to continue to be listed or be delisted by OCBC. So I think these two resolutions have shown that both the GE board and OCBC board had listened to minority shareholders' concerns, which SIAS has been championing, and now the minority shareholders will have the first say as to whether they want GE to be continuing to be listed on SGX. So minority shareholders of GE would now need to decide whether they want to get the exit offer, which is fair and reasonable now, as deemed by the IFA. So I think it's a win for GE shareholders, and there is a very crucial choice that they will need to make now.
I see. Yeah, I do remember that conversation many, many months back. But, three other counters are on our list for today as well as Sunny, namely Keppel DC REIT, Jardine Cycle and Carriage, as well as Netlink NBN Trust. Now, what is happening here is basically Keppel DC REIT will replace Jardine Cycle and Carriage on the benchmark STI following a quarterly review. And then we'll have Netlink NBN Trust replacing Keppel DC REIT on the STI's reserved list. Very quickly, what do the movements mean for individual counters as well as the STI as a whole?
I think let's start with the positive first. For Keppel DC REIT moving into the benchmark STI index, I think that is likely going to be a very positive move. It could signify also that the REIT sector or the REIT counters, which has been very pressured in the last 1 or 2 years, is now getting a comeback to better outlook ahead. So for Keppel DC REIT being included in the STI index will help increase its visibility as well as the trading liquidity as well. And this could potentially attract more investors, leading to higher trading volume and price appreciation. So there are institutional investors or index funds that are tracking the STI index, and they will now be required to buy the Keppel DC REIT shares to be able to align their fund's performance with the STI index if they are tracking the benchmark index. So this will further boost demand for Keppel DC REIT and increase their visibility and liquidity. But for Jardine Cycle and Carriage, it will be another side of the coin, another story, because removal from the STI would mean that they would get lower visibility as well as potentially lower trading volume, because index funds and institutional shareholders may sell out their shares because they are tracking the STI and Jardine C&C are no longer in the STI index. This will create some kind of selling pressure, at least in the near term. But I think for Jardine Cycle and Carriage, the long-term impact would be minimum, because long-term impact will depend on the company fundamentals and performance and market conditions going ahead. So I think for investors who are holding Jardine Cycle and Carriage shares, would need to look out for short-term volatility. And on NBN Trust, correct. They are moving to the reserve list. So STI Index do have a reserve list of 5 counters. So in case any of the top 30 counters in the STI Index becomes ineligible due to some corporate action, then one of the reserve list counters will move up. So for Netlink, this is also a positive development, because it puts them in a very strong position for future inclusion into the main index. And this increases chances that institutional investors or funds could be looking at them, and if in subsequent reviews it warrants that Netlink Trust performance is good and warrants in a inclusion to STI index, this could impact them like what may happen to Capital DC REIT now, where institutional investors will come in to look at the counters for Netlink Trust. I think for STI index, it will be neutral though in the near term, and we are still largely guided by the developments of what is likely going to be happening in the global geopolitical complexity, as well as some of the key earnings on the Singapore companies, which are still pretty strong right now.
Okay, and staying in Singapore, Sunny, a quick question as well. Former Senior Minister Teo Chee Hean will become chairman of Temasek Holdings in October, taking over from Lim Boon Heng. Any quick thoughts on Temasek's board renewal before we move on to look at what's going on in the region?
I think this is a planned leadership succession, because it is also part of a Temasek board renewal process. So, but this could be a sort of a bit of a significant shift towards how Temasek will want to operate going forward, because Teo Chee Hean has been the defense minister as well as the home affairs minister from 2011 to 2015. So he is also on some of the interministerial committee. So with the geopolitical complexity that we are looking at right now, with the trade war or the tariff war between US and China, I think Mr. Teo Chee Hean experience in the various ministry as well as the interministerial committee may help the Temasek board navigate the path better, because we may be shifting away from a period of just managing assets and investment into anticipating what could be the risk ahead that Temasek may be facing, and how do we align Temasek investment with broader national interests and global challenges.
I see. Well, across the region, Sunny, Asian markets started today. We're seeing a couple of things weighing on markets. One is optimism from what's said to be very positive talks between US President Donald Trump and Chinese leader Xi Jinping. The second thing weighing on markets is the public row between Trump and Tesla CEO Elon Musk, particularly on social media as well. Now, what is the overall sentiment towards risk asset in Asia right now, looking at all of these developments?
I think even though it is said to be a very positive phone call between Donald Trump and Chinese leader Xi Jinping, but then there is a little details that is coming out from this phone call. And looking at how the Asian markets perform today, Chinese market, Shanghai is almost flat, Hang Seng is down around 0.5%. I think market is not having a lot of confidence in this phone call. So what is the stumbling block, or what is the issues that caused this rift to develop between Donald Trump and Chinese leader Xi Jinping is because of the rare earth situation, where U.S. is in the previous talk that they agreed to pause the tariff. China agreed to increase the export of rare earth to U.S., which is a critical material in the production of some of the high-tech products like EV cars. So this has caused some of the U.S. production to sort of come to a near stop, and hence it could pull down the U.S. economy, which Donald Trump is not happy about.
Yeah.
But on the other side, on the Chinese leader, they are saying that the recent ban on the students or Chinese students going to Harvard in U.S., as well as the renewed chip bans and some of the software design export to China has also been stopped. So all these issues have not been really addressed in the phone call that we hear last night, and it only resulted in a possible trip or a confirmed trip of Donald Trump to China to further that discussion. So investors are still very wary on the Asian side, and hence Asian markets are not looking very much positive today.
Okay. I've got about 3 minutes to go, Sunny, and I do want to go through the remaining two questions. So if I could begin with the next question, I want to zoom in on the row between Trump and Musk, because Trump threatened to cut off government contracts with Musk's companies, and Musk suggested that Trump should be impeached. We're seeing shares of Tesla down 14.3%, I think wiping off some 152 billion USD off its market cap. What do you make of the row and the outlook for Tesla? Do you think there'll be any more flip-flops to the relationship there?
So first thing first, I think Elon Musk has been could be distracted by some of his participation in Trump administration and government previously, and hence Tesla hasn't really been performing well in the past few years. And on top of that, they are also having very strong challenge from the Chinese EV makers, especially BYD, which has overtaken them as the biggest EV car seller globally. So I think shares of Tesla is actually on very sort of a lot of selling pressure in the past few months, and with this recent spat between Donald Trump and Musk, right, and with Trump mentioning that they are going to cancel billions of contracts for Elon Musk company, that actually pressured Tesla shares down a lot. And on top of that, in the tax bill that was put out recently by Donald Trump administration, we also saw them cutting the EV tax credit as well, which would directly impact Tesla. So I think yesterday a drop of 14% in Tesla shares has investors actually factoring in the possible removal of some of the government contracts for Elon Musk company, as well as the possible impact of the removal of EV credit on Tesla shares. Hence, Tesla is not looking very positive in the near term.
I see. And a quick 10 seconds or 20-second question for you, Sunny, before we let you go. U.S. non-farm payrolls for May due tonight. Are you expecting any major surprises? Okay,
I'll give you my 10-second quick take. So the base case is market estimates. You are looking at 130,000.
Okay.
So if let's say we have a miss, right, that would mean that the U.S. economy might be fragile or in trouble.
Okay.
But then that will also accelerate the Jerome Powell or the U.S. Fed to come in to kickstart the rate cut cycle, which was projected to happen in the second half of the year. Okay. If we have a positive number, that will also mean a positive thing, because U.S. economy is still going strong. So either way it come out, I think market will still be okay and still be positive in the next 6 months towards the end of the year.
Thanks for the insights. Great chatting as always. That was Sunny Soh, Lead Technical Analyst, Capital Markets and Investor Education at SIAS. Thank you so much for joining us today.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.